Hey guys, welcome back, and I've got another episode for you on the journey to $1 million. Thanks for joining me. Let's go ahead and get right into it. Alright, first of all, I would like to go ahead and talk about Gamestop, and if you are holding any shares or options contracts, I want to go over what you can do to try to get out of this, try to salvage the situation. Because I know a lot of you guys reaching out to me and you're in a little bit of a mess right now, to say the least. So let's go ahead and pull this up. And while we're at that, let's take a look. On the blog is posted for the Journey to $1 Million write-up. I went ahead and removed the warning pullback for the entire market, and make sure go ahead and follow me on Twitter because I do the live trading there. If you want to see my real stock picks of what we are actually trading on the Journey to $1 Million, make sure you go ahead and scroll to the bottom of this page and put in your email address here to subscribe, so you will get a notification when there is a new analysis posted. And if you have any questions, guys, go ahead and send me a DM on Twitter or email me. I try my best to answer all of them, but lately it's a little bit busy. Alright, let's see if this is up yet. Here we go. So as you can see, GameStop came off of a high of 483, and actually I think it was a little bit higher than that. Yeah, it went up to 514. Might have been even higher than that, to be honest with you. But I know a lot of you guys are reaching out, and you're either holding bags of just shares, or you're holding bags of options contracts, long calls or whatnot. So this is my opinion. If you have shares and you bought them $300, $400 for a cost basis, I might go ahead and just hold on to that and say a couple prayers. That's the first choice you could do. And if you have any options contracts, I would, especially if they are expiring anytime soon, like this Friday or next week, or it doesn't really matter. If you have any options contracts, I would probably go ahead and liquidate those, go ahead and close those positions just to mitigate the risk a little bit. Overall, let's go ahead and tone down the risk on our positions if you're messed up right now in this. So once you go ahead and get your money, pull your money out of the options, get some cash ready, no matter if it's $5,000, $10,000, or however many options contracts you have. Let's go ahead and get the cash out of that. And I know it's going to hurt because they're down a lot right now. But go ahead and do that. And hang on to the shares. If you have 30 shares, if you have 50 shares, no matter what, go ahead and hang on to those. Now, with the cash that you're pulling out of the options contracts, buy more shares with it. So switch this around. By pulling the cash out of the options contracts, you're going to lower the risk and just buy more shares. If you're overall still want to hang on to a hope and a prayer of your GameStop position overall, go ahead and switch over your contracts to more shares. Try to get 100 shares. You need 100 shares to do what I'm about to tell you to do. Now look at this. This is a Webull interface. If you need a Webull account, go ahead and link in the description. Go ahead and sign up for that. They're giving away 4 free stocks right now, and it's going to help support this channel since I do everything for free. Now go ahead and pull this up. If you're following along on your Webull, this is the options order book when the market closed today. And if you see, the price it was closed at $90, and after market's down a little bit further. But nevertheless, let's take a look at this. Now, once you get your 100 shares, go ahead and go into this. This is February 5th expiration, which is only 3 days from now. We can go ahead and sell a covered call. So make sure this is on calls. Now go down here. We can maybe do a strike price of 100, 110. It doesn't matter. Let's just say 100, because it's probably, to be honest with you, it might not hit 100, but that's okay. We could even do 95, but let's just say 100 strike. 3 days to expiration on this call. Now go ahead and don't buy this, because we just got out of the calls if you had any. And don't buy anymore. You sell it, because usually what we're going to pay for the premiums of getting these calls, we're going to receive those in the premiums. So take a look at this. No matter what you got, if you got if you got 100 shares, you can sell one contract of a covered call against your 100 shares of GameStop. And remember, this is a strike of 100, and the limit price we could set for $20. I mean, doesn't really matter, but they suggested 1980. That was the last that it executed that. So go ahead and sell this covered call. You will get about $2,000 back. So I don't know how deep you're in this, but at least you're going to get $2,000 back for selling this covered call. And that's not bad, guys, because if you have 100 shares as of right now, it's about $85 times 100 shares. It's only going to cost you $8,500 to get into this. And if you're getting back a premium of $2,000, you know, divided by 8, and obviously your cost basis is not going to be, you know, $8,500 for 100 shares, because you're probably watching this and paying attention because you're getting screwed right now, mainly because of diamond hands and Wall Street bets, which is just stop, guys, just stop it. But nevertheless, let's just pretend, you know, that's at current market value of $85, that's about 23% you could turn right there immediately. As soon as market opens, go ahead and switch over, get the 100 shares, get rid of these long calls. Just do this and you're going to get some money back. You're going to get actually $2,000 back. And this expires in 3 days, remember. So at Friday, this is going to be done. It's probably not going to hit the $100. If it does, then you'll sell the 100 shares of GameStop at $100, so it's going to be up about 10%, 15% actually. You're going to make 15% when it appreciates from 85 to 100. If it gets to 100, and you're going to sell at 100 at your 100 strike, and you're still going to keep the $2,000 premium. So overall, you're going to profit. But this is something that's going to mitigate your risk. Just overall, get out of these long calls because it's too risky for you guys. Switch over if you want to hang on to GameStop. Just get the shares. It's overall less risky, and start selling covered calls against the shares. It's pretty good right now because the premiums are still decently high. The implied volatility on this is incredibly high, but that's just what it is because this is a meme stock. You know, if you've been paying attention, I've always recommended not getting into these meme stocks when it's too late, when it's already hyped. There's a lot of FOMO and whatnot. But I mean, you know, it is what it is now, guys. If you're holding these bags, this is what I would recommend doing. You know, I know a lot of you guys are depressed and having really bad thoughts if you've lost a lot of money. But don't just sit on your hands and not do anything. You know, take some action. You know, sometimes lose money. You know, everybody loses money. Even I lost literally last week. I was down about $100,000 in my portfolio, which kind of hurts. But you know, you buy the dip, you reevaluate your position. And a couple of months ago, I lost 90 on crypto, just some crypto play I was doing. But anyways, it doesn't matter, guys. It's going to happen sometimes. Don't beat yourself up too much, but do something to get out of this. And this is what I would suggest. Sell the covered calls against 100 shares. Get out of the options. Get into more shares. If you want to hang on, you can totally cut everything, which would probably be not a bad idea, and then take all the money out and just put it into something else. Or you can sell the covered calls, which you could get some money out, and if you're still hanging on and you think it's going to go up in the future, you know, that's fine. Now remember, you can sell the covered calls now, get $2,000, and then, you know, after 3 days you can sell it again, you know, and then once those expire you can sell it again, so you can keep stacking the cash on these selling the covered calls as long as you have the 100 shares. But anyways, if you have any more questions about selling covered calls, check out my other videos. I usually go over this. I think this is a really good strategy to, you know, to do just overall, because it's not as risky as just long calls. But especially when we're talking about something highly volatile like GameStop, I think this is good. All right, anyways, guys, if you are one of those people that might just cut everything, well, here are some things that you could possibly buy. I'm going to go ahead and go over those. And I post this daily. If you guys are just watching this for the first time, I post it daily, and I post YouTube videos daily for my daily analysis. And on my Twitter, we do the live trading like I said before. And I'm active on Reddit. You might be even seeing coming over from Reddit. Who knows? But anyways, today was a good day overall. S&P is up 1.4%. NASDAQ's up 1.5%. Dow Jones up 1.6% almost. And today my most notable picks that have gone up a lot is CCIV, which we called out on Twitter and in my previous Journey to Million daily posts on my website. We called that out last week, and you know, it's jumped up a lot. It was up like 22% yesterday, 27% today. Guys, if you are paying attention and if you're going in on these when we're calling them out, you're making a lot of money. And if you are one of those people that are making a lot of money from my picks, please send me a message on Twitter. You post on Twitter, tag me, and let me know, because I really enjoy seeing people make a lot of money, to be honest with you. You know, I've been doing this for 10 years, and you know, I started when someone believed in me and they let me borrow $500, and I started this 10 years ago. And you know, it's been an excellent journey, and now I'm financially secure, and I really hope to help you guys to get to the same place I am too. Just got to be a little bit smart about it. And then the last one is Thcx. This one we've been talking about for a long time. It's a 420 ETF, and you know, it's just been going up a lot these days. I'm actually currently selling covered calls, which we just talked about, on Thcx, so that's paying pretty nicely. And then yeah, so here's a picture of my portfolio balance up today. Well, this is actually for the week since February 1st and up until today, so it's up about 12%. So that was pretty good. Thank God too we bought the dip. I hope you guys bought the dip too. If you're following along, we told you guys to buy the dip. And here is just an Excel. I keep track of all my current options positions. I try to post this as much as I can, so go ahead and follow along. And you know, you can see all the positions we have right now. I just go over this really quickly. These are the tickers right here in the first column. The second column is sell put. BC is buy call. You know, BP would be buy put. I mean, it just depends. But you guys, you can probably figure that out. Strike price, the cost of how much the contracts cost. If we're getting paid, then I make it negative, just for the math. And then the contracts, I also like how many contracts it would be. Negative is if we're getting paid. And so then the profit loss, it works out pretty nicely. Once I sell these, I'll put them in here and how much I sold it for under the price. And then percentage profit loss we've made on these positions. And these right here that you can see, these are just selling the covered calls. So I'm actually on the Thcx and solo, I'm doing about 6%. So on Thcx, my strike is 16. And let's go ahead and take a look at Thcx. How much is it right now? It's 19, so it's above that. So we will be getting assigned soon. But that's okay. We expected it. Overall it's good. And then this is the total profit I've closed so far for selling the covered calls. Alright, well, let's go ahead and move on. The first one you've all been waiting for is CE, ticker CE. This is Celanese Corp. This is a technology and specialty materials company. You know, if we take a look at the graph here, it's just been going up a lot since the COVID lows. But this is, you know, basically it's the ethyl, alcohol, and basic organic chemical market. This market in general is expected to grow a lot, especially after the COVID impact, and the companies are moving around and switching. I read a couple of articles on this, and it seems pretty interesting, to be honest with you. And just the trajectory that this stock is on, it's looking pretty nice. And right now it's a big discount because of the market pullback. And it's been pulling back, but I think it is about to turn around. We can watch the super trend on this, see if it flips. It could be a little bit safer, but you might miss out. I would just start dollar cost averaging this if you want to pick up some shares. Or even you could dollar cost average calls by one contract by one contract. But I think that this is easily very reasonable for 150 target price. I only think it's going to take 3 months to get there, but I went ahead and put 3 to 5 months just to be a little bit safer. Risk overall is a 3. I don't think it's very risky. And entry is around $120, but like I said, dollar cost average that. All right, the next one is MU, Micron Technology. This is a semiconductor company, which I really like semiconductors. In my portfolio, the semiconductors have been performing the best by far, actually, over 2020. And I'm still bullish on those. You know, it's just the microchips and everything like that. That's just where no matter if it's phones or computers, that's where our future is headed towards. So I think this is a no-brainer. In this company, it's very interesting, just based on what they do. You guys take a look at this and do some quick Googles, pull up some articles. If you're on Webull, I'll show you what you can do. You can head over to let's see, this is MU. You can head over to the news. Webull is very good for research. There's a bunch of news feeds that you can see here, different what analysts say, which don't really go off of what they say so much because a lot are shills, as we know. But, you know, nevertheless, I think this is going to be a good buy zone. It's in right now. Dollar cost average if it dips a little bit, but I think a price target is pretty safe to say. I think it's about to make a run towards $110. I think it's going to take 3 to 4 months to do that. So, you know, and I wouldn't say this is very risky because semiconductors overall is going to be bullish. I really like SMH, SOXX, and even the Thcx version SOXL. But nevertheless, try to get this dollar cost average in. I think midterm calls I would probably be interested in. Let's see what the market opens, what MU opens for tomorrow, if it's going to be up or down tomorrow. Hopefully it's down so we can start buying some midterm covered calls. I'd probably go out maybe even half a year at 110 strike. That would be pretty safe. BFT. Okay, so this is an SPAC. I really like SPACs. SPACs are just outperforming S&P by a lot. Those SPACs ETFs are really hot right now. If you know any good SPAC ETFs, please go ahead and leave a comment below. And while you're at it, just go ahead and hit that like button. It's really going to help me out for the YouTube algorithm. I think this is really good content for you guys. It's more intermediate level, not just, hey, buy this, buy that, and really don't follow up. But I'm showing you guys what we're really doing, how it works or how it doesn't work for my real portfolio, and I just think this is really good content with the technical analysis and mostly fundamental analysis we're doing here. And hopefully you guys trade along with me. Anyways, so this SPAC is actually merging with Alight Solutions. Now, Alight Solutions is a cloud-based company that offers integrated digital human capital and business solutions. So you guys go ahead and Google Alight Solutions, but overall I think this is a no-brainer. I don't see any problem with the 1.5 to 2x on this. I put a conservative price target around $22, and I might have to raise that, to be honest with you. And entry, I'd go ahead and do right now. I wouldn't buy options on this. I would just buy the commons, dollar cost average down if it dips more, which hopefully it does. And a risk is a 4 because I think this is overall, I mean, the merger is already confirmed. Of course, unforeseen events and circumstances can happen. So it's a little bit risky. That's why I put it as a 4. But I don't think it's a 5 because it's already confirmed, and you see it's been shooting up. But if something bad does happen, it's going to drop to 10 almost immediately. But I don't think that's going to happen. I think overall this is going to be good. And 2 to 3 months just depends on when everything is finalized and the ticker switches after the merger and things like that. But also take a look at Alight Solutions, I would recommend, and also my videos from before and the analysis from before on my website. We go over some of the Biden picks, the Biden cabinet picks, like ACTC and some other ones, so you guys should check that out. But go to my channel, subscribe, hit the like button, please, it really helps me out. And we passed 100 subscribers yesterday, and hopefully we grow really fast, and I hope you guys appreciate this content. And remember, if you guys have any questions about GameStop, hit me up. I'm totally okay to answer questions right now since we're still a little bit small of a community. But, you know, follow me on Twitter, follow me on YouTube especially. You can see these. Remember, guys, if you need a Webull account to follow along with me, that would be awesome. It really helps support the channel. It really does, because I am doing this totally for free, and I plan on keeping it for free. For the long term. But remember, guys, put your email address here, and thanks for tuning in, guys. I really appreciate you guys, and see you on the other side. Peace.